Welcome back to Malaysia Money Matters Show. It's April 25th, 2025.
Good to be here.
Today, we're diving straight into the news that's really shaping the financial picture, both here in Malaysia and, well, globally, too.
Absolutely. There's quite a bit happening.
We'll kick off with what's going on with Malaysian companies, then broaden out to international updates, touch on politics, but keep it focused. What does it actually mean for you?
Sounds good. Where do we start in Malaysia?
Let's begin with REIT. Their net property income, it's a small bump, right? About 1.66% up in the fourth quarter?
Yeah, that's right. Driven by two newly acquired industrial properties, which is positive.
But operating expenses also climbed, and net profit actually fell.
It did, yeah. Down about 12.7%. That was mostly due to lower fair value gains on their investment properties compared to last year. So not as much paper gain.
Okay. But they did declare an income distribution, 1.83 sen per unit.
Payable end of May. And for the full year, things looked, reasonably solid. Net property income up 4.5%. They seem optimistic for FY 2026, mentioning full occupancy.
So underlying industrial demand seems okay, but cost pressures and valuation changes are factors to watch.
Exactly. That's a good summary.
All right, next up, Atlan Holdings. Now, their fourth quarter net profit doubled. That sounds fantastic.
It does catch the eye, doubling profit, but you need to look closer.
Right. The main reason was a big one-off gain, wasn't it? Something about land acquisition by the government.
Precisely. RM 16.76 million gain from land in Kedah needed for a road project. That really boosted the bottom line.
But their actual revenue from operations, like duty-free and auto parts, that dipped.
Yeah, revenue fell almost 18%, mainly from those segments. And they didn't declare a dividend for the quarter.
And they sound quite cautious looking ahead, mentioning costs, inflation.
Very cautious. They highlighted rising costs, inflation, potentially weaker consumer spending, and importantly, the potential impact of those, possible 24% U.S. tariffs on Malaysian exports that could really hit the auto industry.
So a headline jump, but driven by a one-off, and underlying worries remain. Got it.
That's the picture.
Okay, let's talk about Bursa Malaysia itself, the exchange. TNB Securities, they're forecasting a drop in first quarter profit for Bursa.
Yes, potentially quite a significant one. They're estimating a decline of between, say, 17.9% and 26.9% year on year.
Wow. Why such a drop?
It mainly comes down to lower trading activity. The securities average daily value, or ADV, fell about 15.6% to RM 2.7 billion.
Because investors are nervous. Maybe those U.S. tariff uncertainties again.
That seems to be the driver. Cautious market sentiment. TNB thinks that the actual net profit will be between RM 55 million and RM 62 million, which is quite a bit lower than what analysts were generally expecting for the full year.
And costs might be up too. Cost-to-income ratio rising.
Projected to rise, yes. And no dividend expected for Q1. CM basically said if this lower trading volume continues, they'll likely cut their forecasts further.
A direct hit for market jitters then.
Pretty much sums it up.
Okay, some potentially better news perhaps? IGB REIT and IGB Commercial REIT.
Yes, both reported higher earnings for their first quarter.
For IGB REIT, that was driven by Mid-Valley Mega Mall and the Gardens Mall doing well.
Correct. Higher rental income pushed net property income up 7.1% to RM 133.1 million. That resulted in a distribution per unit, a DPU, of 3.19 sen.
Nice. And IGB Commercial REIT.
Also up. Net property income rose 13.5% to RM 38.9 million. They cited higher occupancy around 89% now and better average rental rates. DPU there was 1.07 sen.
So good performance, but are they also cautious?
They are. Both mentioned future challenges, things like, general economic uncertainty, the potential impact of fuel subsidy cuts on shopper spending.
All right. That could hit mall traffic.
Could do. And for the commercial REIT, specifically, the ongoing oversupply in the office market, especially with newer buildings competing hard.
So enjoying the present, but keeping a wary eye on the future.
A very common sentiment right now.
Let's shift to M&A. IJM Corp. They've completed that UK acquisition.
Yes. Finalized the purchase of a 50% stake in JRL Group, a UK construction firm. Cost about RM 283 million.
What's the goal there? Expanding UK presence.
Seems to be. Scaling up their capabilities, looking for growth opportunities in the UK market. JRL apparently has a pretty large order book, about 1.45 billion.
Though JRL had some financial issues recently.
Reports suggest they faced some challenges, yes, but IJM clearly sees it as a strategic step for their UK ambitions.
Okay. Luxtrum Corp. Different sector, chemicals. Their Q1 profit was down,
Down about 8.6% to RM 10.57 million.
even though revenue went up slightly.
That's the tricky part. Revenue rose 3.8%, but operating costs increased even more by nearly 10%. That squeezed the profit margin.
For both their trading and manufacturing parts.
Yes, both segments saw lower net profit despite higher revenue, no dividend declared. They're focusing on boosting productivity and efficiency now.
Another example of rising costs biting into profits.
Exactly.
Okay, some contract news next. Reservoir Link Energy.
They got a work order from Petronas Caragali. It's for lightweight well testing services.
Under an existing umbrella contract, what's it worth?
The value isn't fixed. It depends on how many wells they actually service. But they estimate it could potentially generate up to RM 40 million.
Good potential, though. And Steelhawk, also a Petronas Caragali contract.
Yes, a 3-year deal for structural repairs and maintenance in the splash zone, that's the area around the waterline on offshore platforms, covers peninsular Malaysia and Sarawak assets.
Is there a fixed value?
No, it's on a call-out basis, meaning they get paid for work as it's requested, but it's expected to contribute positively to their earnings starting from the financial year ending December 2025.
So positive signs for activity in the oil and gas support services sector.
Definitely suggests continued spending by Petronas Caragali in maintaining its assets.
Now this one sounds big. TNB, Tenaga Nasional. They're massively increasing their capital expenditure.
Hugely. More than doubling their budgeted capex to RM 42.9 billion. It's a very significant number.
Wow. What's the driver for such a huge increase?
It's all about supporting Malaysia's energy transition. A huge chunk, about 64% of the contingent capex, is earmarked for upgrading infrastructure. Think grids ready for more renewable energy, supporting the National Energy Transition Roadmap, interconnection projects.
So preparing the system for a greener future.
Precisely. They're focusing on accelerating decarbonisation. Investments in solar, battery storage, green hydrogen, even carbon capture, electric mobility, smart grids.
Right.
The works.
They already have quite a bit of renewable capacity, don't they?
They do, about 3.3 gigawatts in peninsular Malaysia and another 1.1 gigawatts abroad. This investment aims to build on that substantially.
That's a major, major commitment. Really signals the direction of travel for energy here.
Absolutely. It's fundamental to hitting those national climate goals.
Okay, quick hits on a few others. ICT Zone Asia, moving ahead with their ACE market listing.
Yes, signed underwriting agreements with Malacca Securities and Tenaga. They plan to list in Q2 2025, despite the market volatility.
Confident in their business model.
Seems so. They highlighted their recurring revenue model and are aiming for an unbilled order book of RM 500 million within 3 years post-listing.
Unisum, semiconductor assembly and testing. Their Q1 profit fell quite sharply.
Down 29% to RM 6 million. Again, margin pressure from rising costs, even though revenue actually increased by over 16%.
So cost outpaced revenue growth significantly.
Exactly. They maintain their dividend of 2 sen, though, and expect improvement next quarter. But they also voiced concerns about tariffs and trade restrictions.
That theme again. Okay, contrasting that, Vitrox Corp. Strong Q1 profit jump.
Very strong. Up 40.2% to RM 24.16 million. Revenue also climbed 18%.
What drove that?
They said stronger sales and a favorable product mix, meaning they sold more higher margin products. No dividend declared this time.
And they're optimistic for the full year.
Very. Forecasting robust double-digit growth for FY 2025, citing demand in key tech sectors like automotive, AI, and telecommunications.
So a definite bright spot in the tech space there.
It appears so.
Textum Resources, they're back in the black.
Yes, return to profitability in the first quarter. Net profit of RM 870,000 compared to a loss last year.
What turned around?
Mainly a turnaround in their restaurant division, plus better earnings in most other segments. Revenue is up marginally, about 2.5%. No dividend, though.
Still cautious about the global picture.
Yes, mentioned geopolitical tensions and trade policies, but they are aiming for revenue and bottom-line growth.
All right, 2 more local ones. ZUS Coffee. Big expansion plans.
Huge plans, aiming to open nearly 200 new stores across Southeast Asia this year. Over 100 just in Malaysia, around 80 in the Philippines, 6 in Singapore, and entering Thailand and Indonesia, too.
Wow. They've really grown fast, haven't they?
Yeah.
Bigger than Starbucks here now?
Apparently so. Malaysia's largest coffee chain now. Their net income reportedly tripled in 2024.
What's their strategy? Lower prices, local tastes.
Seems to be a mix. Tailoring flavors for each market, strong online app presence, and yeah, cost optimization allowing lower prices than Starbucks.
Interesting growth story. And finally, U-Mobile. partnering up in Sabah.
Yes, partnering with Celcom Timur Sabah, or CT Sabah, U-Mobile will lease fiber circuits from CT Sabah to support its 5G rollout in Sabah and Labuan.
So CT Sabah will build out the fiber needed.
They'll upgrade existing 4G sites to handle 5G and also develop new fiber infrastructure specifically for U-Mobile. It's about getting that crucial backbone in place for 5G.
Okay, that covers a lot of ground on the Malaysian front. Let's shift international.
Right, and predictably, U.S.-China trade dominates.
It seems never-ending. China's demanding the U.S. revoke all unilateral tariffs and denying any trade talks are happening.
That's the official stance from Beijing. Quite firm. This is despite, President Trump making some slightly softer noises recently. But China's saying, no talks, remove the tariffs first.
Meanwhile, the U.S. is launching a new probe into truck imports.
Yes, citing potential national security risks, which, well, hints at the possibility of more tariffs down the line. Although they are also considering some exemptions for car makers.
Just constant uncertainty, isn't it? How's it impacting businesses?
We're seeing widespread effects. Companies raising prices, cutting their financial guidance, expressing real concern about the global economy and consumer sentiment.
And even the IMS is worried, downgrading growth forecasts.
Yes, the IMS specifically cited Trump's tariff policy as a key reason for downgrading both U.S. and global growth forecasts. It's having a tangible impact.
What about the U.S. domestic economy? Labor market?
It's still showing resilience on the surface. New applications for unemployment benefits rose only slightly last week.
But are there signs of caution underneath?
Definitely. Businesses seem wary. Some reports suggest hiring freezes, or at least pauses, and preparations for potential layoffs if things worsen. Business spending on equipment also only saw a tiny increase in March.
So, not collapsing, but maybe losing steam or just bracing for impact.
That feels like a fair assessment. Caution is the word.
And U.S. stock markets reflecting this nervousness.
Very much so. Futures were lower today. Investors are reacting to every twist and turn in the trade news, plus mixed corporate earnings.
I heard airlines are struggling to even provide forecasts.
Yeah, several major airlines have actually withdrawn their financial forecasts, explicitly blaming the trade war uncertainty. That's a big sign of how disruptive it is. Investors are just jittery, add in Trump's attacks on the Federal Reserve, and it creates anxiety.
Speaking of the Fed, what's the latest thinking there? I saw comments from Cleveland Fed President Beth Hammack.
Yes. She basically said conditions still support continuing their balance sheet reduction, quantitative tightening, or QT.
But no rush to change interest rates.
Exactly. She emphasized now is not the time for preemptive policy changes, advocating for patience. A wait-and-see approach.
Are they thinking about what if markets get really unstable because of trade policy?
Experts are certainly discussing potential Fed responses. Using existing tools like the standing repo facility to provide liquidity, maybe. Bond purchases are seen as a possibility, but there's caution there because of inflation concerns.
A difficult balancing act for them.
Very much so. Trying to manage stability without reigniting inflation.
Shifting geographically, any news from the Taiwan Strait?
China's military reported monitoring and warning a U.S.-guided missile destroyer that sailed through the strait. Standard practice now, almost.
It's still tense. China accused the U.S. of public hyping.
Yes, they used that phrase, accusing the U.S. of distorting legal principles. It just highlights the ongoing geopolitical sensitivity of the region.
Okay, let's look at commodities. Gold.
Gold prices rebounded a bit. Seems investors saw the recent sharp drop as a buying opportunity, especially with those U.S.-China trade tensions still simmering. Gold often acts as a safe haven in uncertain times.
And oil prices?
Yeah.
Also up slightly.
Recovered a little after dipping earlier. The dip was reportedly due to talk that OPEC Plus might actually increase output soon, plus those conflicting signals on tariffs impacting demand outlook.
And the U.S.-Iran nuclear talks add another layer.
Yeah, that adds uncertainty to the potential future supply picture as well. So lots of moving parts for oil.
One more international point. TSMC, the chip giant. Any updates?
They announced their tech roadmap. Plans to start production using their next generation A14 chip technology in 2028.
That's quite far out. Anything sooner?
Yes, an intermediate process A16 is planned for late 2026. It just shows their commitment to staying right at the cutting edge of semiconductor manufacturing. It's crucial for the whole tech world.
Okay, let's pull this together with the political angle. A lot of what we've discussed has political roots, obviously.
Absolutely. The U.S.-China trade situation is fundamentally a political issue with massive economic consequences. President Trump's unpredictable trade policy, China's responses, it's all politics driving market sentiment.
And Trump's comments about the Federal Reserve? That's political pressure, right?
Yes, his public criticism of Fed Chair Jerome Powell and the institution itself creates market anxiety about the Fed's independence, which is a political factor impacting the economic outlook.
The Taiwan Strait incident, to pure geopolitics.
Highlighting ongoing regional tensions.
And bringing it back home, Malaysia's direct political engagement is crucial right now. Our trade minister is in the U.S.
Yes, the Minister of Investment, Trade, and Industry is currently holding talks with the U.S. Trade Representative. The key goal is seeking relief for Malaysia from potential tariffs. That's a critical political and economic negotiation for us.
And Bank Niger's governor suggesting we'll likely need to revise our growth forecast downwards. That's a direct consequence.
It seems unavoidable. The governor indicated that the trade and tariff uncertainties are significant enough that a downward revision to Malaysia's growth forecast is likely necessary. It shows how these global political shifts hit home directly.
So, wrapping up our deep dive today.
Yeah.
Quite a lot going on. For me, thinking about the most significant or perhaps exciting piece of news, it has to be that huge TNB investment.
The RM42.9 billion commitment.
Yeah. It just feels so forward-looking. A massive bet on Malaysia's energy transition, upgrading the infrastructure, pushing renewables. It could really reshape things long-term and spur growth in new areas. That stood out to me. What about you? What's the biggest theme or development you're taking away?
It's hard to look past the sheer pervasiveness of the U.S.-China trade situation. It feels like almost everything we discussed today was touched by it somehow.
True.
From individual Malaysian company earnings, like Atlan or Unisum worrying about tariffs, to the overall caution impacting Bursa's trading volumes, then globally affecting growth forecasts, commodity prices, even the Fed's thinking.
It's the common thread.
It really is. The ripple effects are just so widespread and create this layer of significant uncertainty over everything. The fact that our own minister is in the U.S. specifically trying to navigate this, it just underscores how central it is right now.
Absolutely. A crucial situation to keep watching closely, no doubt. It will definitely continue to shape the financial landscape.
That's true.
Well, if you found this breakdown useful and you want to stay up to date on the financial news that matters to Malaysia, please do make sure you subscribe to the Malaysia Money Matters podcast.
We'll keep digging into the key developments and what they mean.
Trying to save you time while keeping you informed. Thanks for tuning in. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.